Hey, it's Clay at claytrader.com. This will be the weekly review of the Power Profit Scan newsletter, which comes as a component of the Inner Circle subscription service that I offer here at the site. Just want to do this, and I've been doing it to give you a little idea of what you will get. And if we can mix in some education, which is my goal also, then that just hopefully will benefit everybody. A couple quick disclosures as always. First, am I trying to imply that every single alert that I make, that every single setup that I send out is a winner? Absolutely not. In fact, if you've watched past videos and I've shown losers, I've shown ones that really just don't play out in a smooth type of fashion. So I'm not trying to come across like anything is perfect. But the one thing to keep in mind in the educational aspect here is that, yeah, nobody's perfect. Nothing is perfect. So losses are going to happen. Bad trades are going to happen. But that's why risk management, risk control is so important, because when the bad trades happen, you don't want them to spin out of control. But sure, bad trades happen, but good trades, winning trades also happen. And when those do occur, that's why you want to make sure your account is in a proper fashion where you can benefit. And then over the long haul, let your account grow and grow because you're very solid in the risk management department. Second disclaimer here is that we are going back a while to look at the week of 11/12 of 18. Why are you going back so far? Two reasons. First off, it's just giving the charts and everything plenty of time to play out so we can see what has happened. And then on top of that, it's just a matter of being fair. The last thing I would assume you would want is to pay for something and then all of a sudden you see it out in public for free when you just paid for it. So just a matter of being fair to members. So before we go any further, I want to establish a little context here. And this article came out very recently, and when I was glancing through it, I just thought, that I think this would be a great job to establish some context here. So it's from CNBC, and this is Jim Cramer here. If you're not familiar with him, he's a guy on CNBC that has a Mad Money show that's yelling and all that sort of stuff. And he threw out this comment, and I thought, all right, well, I think I want to use this because boy oh boy, does it offer a whole lot of context. So right here, he said that I as in Jim Cramer, bought some 3.5% CD. CD standing for Certificate of Deposits yesterday. So Jim Cramer has bought a CD, and he says, what? I feel pretty good. Okay, that's fine. I'm not judging. They're out 5 years. So a 5-year CD, he's going to get 3.5% on that. Just keep that in mind. 5 years, 3.5%. Couple quick FYIs just to, if you're interested in maybe the service. As far as prices, hey Clay, what sort of stocks you alert? Just keep an eye on the prices that we cover. We'll starting off with, as you see here, a sub $5 stock, but we'll cover other prices too. And then also this is the newsletter that is sent out over the weekend. So what you see here is the chart going into the weekend, and then as we start to see the price action play out, that'll be the following week and beyond. So the first alert here, NVLN. And I threw it in a panic play category. And what I'm proud about here is, and this will mean a little bit more to you maybe if you've been in other chat rooms, especially those ones that are free and stuff like that. But, a stock can go up and up and up, and all people keep saying is, this is the greatest thing ever, buy, buy, buy. And that's not really a smart way to go about trading. That's a great way to cause chasing, which is not a good habit. But here, pulled this up and imply that, there may be some panic, there may be a pullback that is coming, and then I focused more so right around here on the dollar level. So let's see how this one played out. But yeah, definitely by no means any sort of pumping or hoopla or anything like that where you would get people to be buying up here, because as you're about to see, that would not have been a very good entry point. So here is the chart, again, going into the weekend, and then, the next day you'll see will be, the Monday, and then the following days to come. So right there, the pullback does indeed occur. And right there, you can see the price drops beautifully down to that area that I was talking about, and then got a bounce back upwards. Now, I realize that it doesn't seem like much, but when you're talking about a dollar stock and it went up to $1.15, that was a 15% move in essentially a day and a half. I get it. Yes, I know, 15%. It's not like, I'm even guilty of this. It's not like some of the past ones where, there's been a 200, 300% winner. But still, what was Jim Cramer happy about? 3.5% in 5 years. And here you had a chance at 15%. Let's just say you played it really bad and maybe you only got 5% out of it. You got 5% So you still got more than Jim Cramer in a matter of basically a day compared to 3.5% over 5 years. And that's, again, playing it really, really bad where you butchered it. So, yeah, perspective. A nice little move here, especially when you factor in the amount of time that it happened in. And you could have made some quick movement or quick change from it. And I know there were some people in the chat room that were saying, hey, good call. You know, it bounced right off that dollar mark, which it did. Fortunately, didn't get much follow through, but still 15%. This next alert here was in the history repeat category, ticker symbol NBEV, and just made a comment about how the previous times it's been down around that green area, there have been some good solid bounces from it. And then I also pointed out, you know, the 200-day simple moving average down here as a key area on the chart, and one from you know, a risk management perspective, which would definitely play in as far as stop losses and all that is concerned. So here's the chart going into the weekend. Let's see how this played out. So definitely a couple potentials for entry points right there. I'm assuming that you got in more so up here. I'm not going to play some like best case scenario where you nailed the bottom or anything like that. But you can see it did pull back, sure, but never violated that 200-day, which is definitely critical from a risk management perspective. If you have no idea why that would be the case, then that's okay. I'm just saying that's probably a sign that you have some holes in your understanding of how to go about the market. But you can see right there, made a nice recovery and then hit a high right there, which was good for 25%. Did pull back here a little bit, so I'm assuming that would have taken you out. Maybe it didn't. There's plenty of scenarios where this little pullback move would not have taken you out of the trade, and if you had actually stayed in, then yeah, actually the thing just has continued to chug upwards. It is now trying to break through 7. But regardless, even this little move right here was a profit potential window of 25%. We'll go with, yeah, you didn't play it very well. Maybe you screwed up half the trade, so you got 12.5%. Still, 12.5% in a matter of 3 or 4 days compared to 3.5% in 5 years. Wow, perspective is powerful. Now I want to hop back over to another comment here, and I do read the comments on YouTube and the website that you leave, and a lot of people enjoy seeing kind of the short-sided trades here. But just quick, what is shorting? Shorting is when you make profits from prices going down. And I wanted to focus on this once again is because in the market, as of the recording, things have been getting pretty nasty. Markets have been falling, stocks have been falling. But even in these situations, you can still actually make money because, yes, when prices go down, you can profit from that, and that is called shorting. So as part of the newsletter, you do have some alerts that I send out via just, you know, down here. But you may think, well, Clay, where's the actual chart at? Where's the annotations? Well, this is for why I specifically say students of the course that I offer on shorting. Shorting for profit is the name of it, because once you have knowledge, then you know what to do. You know what to, you know, where to take that ticker symbol, you know how to analyze the chart, and you know how to structure a trade plan. So that's why there aren't any charts, because these people flat out have invested into their knowledge, and they know how to, you know, take that ticker symbol and then start to analyze the chart from it. So let's look at, I want to go over all three because it does a good example of just showing a more so realistic side of trading. But also remember that the current market atmosphere right now is quite bearish, and there is still ways to make money from it. As a quick reminder, prices going down is good. Prices going up is bad, because from a shorting side, when prices go up, that's how you actually lose money. So in this situation, a little, maybe your brain's a little, whoa, what? We want to see prices go down? Yes, I get it. It's weird at first, but you want to see prices go down. So here you can see there's Monday, a little bit of upwards movement. And then the price does go down there and then quickly rebounds. So this is one of these where I could see maybe people making some money from it. But it was not smooth. And earlier, you know, I made a comment about I don't want to come across like every alert that I make is perfectly smooth, like you're about to see. But sometimes these happen. And yeah, I mean, it went down, but it went down in kind of a goofy fashion, and then it quickly rebounded back up. So I could see a variety of situations. I could see just a break-even trade. I could see some sort of a winning trade. I could see a small loss trade. So yeah, a big variety. So I'm not going to call this a winner at all, but I'm also not going to call it a loser, or because there's just a lot of gray area. But, you know, hence the part about not everything is always smooth. Now let's go take a look at the NVTA chart. So let's see how this one played out. Again, prices going down is a good thing. So went sideways a little bit, plenty of opportunity for people to potentially get in. Showed some weakness there and dropped a little bit more. But again, kind of a goofy one. That move right there was good for 5.4%. And I bring up that number because, yeah, it was goofy. It was definitely smoother, though. Got to move downwards, came back up. Did actually pull back here, so still not as smooth as possible, but enough where I would say comfortable. Yeah, you had some wiggle room to work with there. And, yeah, 5.4%. But, again, what was that number that Jim Cramer was happy with? 3.5% in 5 years. And here was, an opportunity at 5% in a matter of literally just basically a week. And then the final one we'll look at here is ticker symbol KTOS. So here's the chart going into the weekend. Let's see how things played out. Again, falling prices, a good thing. So right there, goes sideways for a little bit. Shows a false green move right there. And then look at this thing just completely collapse. But no, it's not done yet. It rolls back over that much more. And finally, at that low point right there, that was a move good for 19.6%. Again, nothing massive, but still, let's say you only got 10% from it. 10% in the matter of about 3 weeks. So 10% in 3 weeks compared to 3.5% in 5 years. And finally, I wanted to go back to an alert I made on ECA from the scan, and it was just simply in the technical pattern category, and the technical pattern being a sideways channel. Now, it was kind of ambiguous, just I mapped out the channel, but the point here is when you have knowledge, you have power. And when you have full knowledge and you do understand how to short and make prices from money, or when prices go down, then it really expands your opportunity, your ability to pull profits from the market. Because as you're about to see, I'll do a little spoiler alert right here. There was really no long opportunity. The price never did break out to the upside of the channel. Because right now, yeah, it was maybe some sort of bottom here, but needed some sort of confirmation. And a good starting point for confirmation would be a breakout from the bottom, which, again, you're not going to see. However, something else happened, which, again, circles back to my point. When you have knowledge, when you have all the tools in your tool belt, there's opportunities to still make money. So there is the sideways channel, and let's see what happens. You know that it doesn't break out to the upside. Right there, it partially does, and then you get this nasty red candle. And then it breaks to the downside of the pattern, or in technical jargon, a pattern breakdown. Not breakout, but a breakdown. And again, with the concept of thinking going short and making money from prices going down, I'm just going to speed this up. But I mean, check out the catastrophe and therefore profitable opportunity from the short side. Just has continued to drift down. The other quick example is this is why you want to be disciplined. For, if you did get in around here for whatever reason, cut your losses. This is why you want to cut your losses, because can you imagine still being in here and then with the price drifting further and further down, and it just continues. And right now, as of now, 34.2%, and that's up to date, real time. So who knows if this thing's going to continue on down, but that's 30%. Let's say, I don't know, you pressed the wrong button and you only got, let's say, 15% out of it. So again, you screwed up half the trade. 15% within a matter of a month. That's not too bad when you compare it to somebody being happy about 3.5% for 5 years. But here's just another example of a good short-sighted breakdown and how money can be made when prices fall. Now, if you are interested in signing up and getting this newsletter, again, the Power Profit Scan, part of the Inner Circle membership. Along with the membership, you also get access to the live trading chat room, which probably gets more talk than anything else, which is why I wanted to do these videos, to make sure people are aware that you actually get a newsletter too. So these are all the benefits here. There's also a mobile app, so it's not like you have to stay chained to your computer. You can stay in touch anytime you want and from anywhere you want. And that comes, with no additional cost or anything like that. So again, you can just go to claytrader.com/inner circle, or just go to claytrader.com, and there's a little section for the Inner Circle. As far as the cost, $99 per year, not per week, not per quarter, not per month, per year. If you do the math, that breaks down at $8.25 per month. Or if you want to break down the math further, $1.90 per week. So what do you spend $1.90 on per week? That maybe if you just cut out, then all of a sudden, here you go. You can afford, the subscription there. So more than fair as far as price is concerned. And as I say every week, and I'm going to continue to say, I am very, very confident that over the time span of 12 months, you'll get at least $99 worth of value. If there are any other questions, leave them in the comment section below. Reach out to me, whether that be on social media, through the website, whatever's the easiest on your part, and I will do my best to answer any questions you have. But yeah, hope you decide to join us.